Now, I'd like to turn our attention to our next panel of experts to talk about some of the new challenges that climate change has posed, but also new opportunities that the financial sector is well positioned to help solve. We've received over 40 questions from many of you that have signed up and passed them all along to the panelists. Some of these questions include, how are finance products considered green? What factors would make financial institutions consider sustainability over profit? And how can we measure environmental impact and sustainability? So to address all of these questions and many more, I'd like to welcome Sopnendu Mohanty, the Chief FinTech Officer of the Monetary Authority of Singapore, Thomas Jensen, CEO of Copenhagen FinTech Denmark, and Ray Ferguson, Chairman of STACS Singapore. Thanks to all of you for being here, and I'll request Sopnendu to kick it off. Over to you.
Hi, Amrita. Good to be here talking about a very important topic for all of us. And the questions were quite pointed, and I couldn't help myself to pick three of this list of questions, which I thought I should speak on. One was the Singapore's specific actions Singapore is taking in this space. I will speak on the tech side of the work we're doing, and also talk about ESG careers, which is interesting. People want to get into the career where ESG is involved. Talking about Singapore, our Prime Minister Lee recently announced something called Green Plan for or Singapore Green Plan 2030. He talked about our collective action to tackle climate change. And this is essentially a 5-pillar strategy which talks about city in nature, where you talk about green, livable, and sustainable home for Singaporeans. He spoke about the sustainable living, where we talk about the green commute, green citizenry. Then the third pillar was around green energy reset, which talks about cleaner energy vehicles, Grab out there. Greener infrastructure and buildings, sustainable districts, townships, green energy. And the fourth pillar was on green economy and how we incentivize enterprise to shift to sustainable practices. And the fifth one on the resilient future, because Singapore is definitely worried about the rising sea level, and we got to do our own part to keep the climate cool and hopefully bring down the global rising temperature. So that's the broad government plan. But today I'm going to talk specifically about what MAS is doing in this space, because all this requires a lot of financing, and there's a significant financing gap in this space. And before I lay out what MAS is doing, let me give you some stats around why this issue is a serious issue for us to deal with. By some stats, there is an estimate of $2.5 trillion or $4.2 trillion by economists who talks about a significant risk to global financial asset, quite a significant risk on this asset due to climate change. We have seen that the sustainable investing has become mainstream. Almost $30 trillion worth of asset is now managed under ESG investing, up by 34% from 2016. Quite a shift from where it was. And the third point, which is I think most interesting to me, was on the stats that by 2030, there'll be a shift. There'll be an intergenerational shift of transfer of wealth from the current to the next generation. And they are quite tuned to the sustainability, and they're going to make good choices than their previous generation. And that's close to $15 trillion worth of assets changing hands. And in Asia alone, 35% of the Asia's wealth will be in the hands of millennials in next to 5 to 7 years, which is quite an encouraging sign, because the millennials are far more worried about this, and they will make those green and sustainable choices as this wealth get transferred to them. Now, Asia in particular accounts for half of the global greenhouse emissions, which is quite a significant contribution to the global greenhouse emissions. And we need in Asia close to $1.7 trillion a year to 2030 to get into to the goals of the ESG goals which UN has set for all of us. So that's a lot of capital is required in this space, which makes almost like a urgent need for policymakers to respond to this crisis. MAS last year created a strategy which builds around building resilience, developing the green market, and leveraging technology, all the good work done on the fintech space, to see whether you can use some of these fintechs to shift some of the solution to the green finance space. We have released our risk management guidelines. We have announced a $2 billion green investment program with asset managers who are committed to drive the green efforts out of Singapore. We also developed green schemes which will support mainstream green and sustainability linked loans. We are also building center of excellence and also working with help or facilitating support and expansion plan for rating agencies and reviewers will help to make those necessary capabilities to shift to green projects and green assets. So that's a brief on what MAS has been doing. As an outcome of that whole effort, what's happened last year was we saw in Singapore a 65% growth in our green linked loans. Some $3.5 billion worth of green and social sustainable bonds were issued in Singapore in 2020. It brings to a cumulative of $10 billion of bonds issued in Singapore towards ESG. And mostly this was directed to renewable energies, green buildings, and sustainable water and wastewater treatment. Now, where does fintech fits into the whole space? So what we did is the last year we announced something called Project Greenprint, because for us, we believe that the real barrier to green financing is 6 things: data, trust, an efficient ledger, business model, green technologies themselves, and policies. So we have created a 3-track strategy behind it. How do we mobilize investments, which allows, which are a marketplace can be created, where we can fund, discover green fintechs or tech companies who are focusing on green solutions, and projects are looking for green finance. We're also looking at how do you monitor these green projects. We are looking at independent verification processes, data sets, third-party providers who can provide green certificates and measure these KPIs. And lastly, we're looking at how do you measure impact. In fact, a couple of the demos we saw are in this space, how they use technology to measure impact. We are looking at solutions to build that capability out of Singapore so we can measure the impact as we shift our asset deployment from brown to green and blue. So that's what is happening on the tech space. So I'm quite hopeful by next couple of years, we should be able to build collectively some kind of a hybrid green data platform, which brings all these processes, data, certification together and facilitates this great, the growing need for green finance in Asia, which accounts, as I said, almost $1.7 trillion worth of investment year over year till 2030. And lastly, to conclude my on the careers part, so we have just launched a program with SMU and Imperial College Business School, a program on a degree in green finance. We're also working with a lot of universities here to create certification program. There's a huge demand on talent who are getting skilled in this space. And also recently Moody announced its green ESG focused innovation lab and tech accelerator in Singapore. Hopefully they also kick off some demand as banks and FIs and insurers are looking to hire green specialists. With that, I will take a pause and hand over to my next panelist to talk about their insights in the space.
Thomas, thank you so much. Yeah, thank you so much. Yeah, and first of all, thank you so much for inviting us to participate in this event. That's super exciting. I've picked up on 3 questions when I read all the many questions that were sent in, and the 3 questions I picked up on was what factor would make a financial institution consider sustainability over profit? I saw also just now in the chat or in the questions that Jeanette asked a question around how green and profitability can coexist, how it can, and what green fintech's role in this is. And another question actually addressed why oil and gas industry must become green. Is it really relevant for the fintech industry to think about becoming green? So I think for the last one here, is it really relevant? I think we've just seen 5 really good examples of why it's super relevant for fintech to becoming green. And I think also going through the questions, there was a little bit of a feeling, without being Greta Thunberg here, we need to agree that we have a burning platform. There's no planet B, as the sign says. If we do not act, profit doesn't matter. There will be no profit long-term without a sustainable approach. Hopefully we can agree on that. I think at current emissions rates, at least the numbers I've seen, that the 1.5 degree threshold will be crossed in about a decade. So we can say, the reason why we need to act. I think in my opinion, there's no doubt that we need to act, and we need to act now. So this is very much a dual approach. So I think, okay, so these are the 3 questions I will try to pick up on. Maybe there are also someone wondering here, how the whole of the Nordics. We've seen 4 of the startups here from the Nordic and an excellent one from New Zealand here. So how are the Nordics fitting in with this? And I think coming and being part of the Singaporean fintech ecosystem for so long, I can certainly say that Singapore in the financial space, and especially in the fintech space, is a global leader. I think what the Nordics can add here is a region with a very high and long focus on sustainability in general. If we look at, there's something called the Environmental Performance Index, and it actually says that the number 1 when it comes to sustainability and environmental performance is Denmark, Nordic country. If you look at the SDGs, and you look at how are we on track on actually achieving the SDGs, Sweden is number 1, Denmark is number 2, and Finland is number 3. The single biggest, largest dedicated greenfield renewable fund in the world is just launched in Denmark by a Danish company. And we just also announced the world's first green energy island at the size of 18 football pitches in the Northern Sea. And the second most sustainable company in the world, last year's number 1, is a Danish company called Ørsted. So let's just, when it comes to sustainability and environment, I think the Nordics also certainly have something to offer. And when you marry those 2 things, like the heavy focus on sustainability and environment with Singapore's leading position in finance and in fintech, we have a really interesting combo, which hopefully you already have seen now. So just to get back a little bit to the questions here, I think financial services in general, and I think a little bit from the ecosystem that I come from, is a little bit underplayed here. So financial services in general plays, and I think also Sopnendu in previously made an excellent point in this, plays an immense important role here. There's a huge need for investments, and if you need, I think there's numbers being mentioned here around $3 trillion every year that needs to be directed into renewable energy. As Sopnendu mentioned, 68 trillion in wealth will actually shift hands in the next 25 years. So it's actually not that much when you think about it, that needs to change into the green space and into green finance. So there's a really huge opportunity to exploit here. And I think also when it comes to what actually matters, I think sometimes we have a tendency to discuss maybe not always the right things. We have a tendency to focus a lot on flying less and eating less meat and taking the train instead of the car. And that's, of course, I'm not saying that shouldn't be part of the equation here. But if you look at actually doing the single most important decision that we can do to actually accelerate a more sustainable world, that is actually to change your pension savings into sustainable funds. That's 27, up to 27 times more efficient than some of the other things that I just mentioned. So that goes without saying that financial service is just so important when it comes to accelerating a better future. And I think if you look at some of the headlines, that is why this is important. First of all, it's about access. And I think, again, coming back to the 5 companies here, you all proven that it's all about access, like greater accessibility to make climate-friendly decisions. It's about efficiency. It's about faster processing power and more informed decision-making. It's about transparency. It's about increased visibility on data and money flows of transactions. It's about accountability. It's about verification and enforcement of, for instance, that we also saw just in the 5 companies here on carbon commitments, just to mention an example. And I think there's a 5th one also where we need to talk about education, because we talk about it like it's, everyone knows this. And there's, this is about all stakeholders learning about the climate challenges, realizing that this is a real problem. This is not something we can talk about and then discuss terminologies and regulation and stuff like that. It is happening now, and we need to act now. We need to create that urgency through education. And I think FinTech solutions, green finance, this is making everyone able to participate with their financial assets. And I think when we talk about our financial assets, we also need to talk about it, not something that lies in a financial institution. Of course it does that, but this is our money, and we have the right and the ability to actually move it where it matters most. So this is about us, everyone here in the call, making a decision to change those funds. So I think that was my 2 cents, and I think Ray will have some really interesting perspective on this also.
Oh, thank you, Thomas. And you've already made me change my opening of my talk, because you labored quite heavily there on the choices people need to make in terms of investments, in terms of pensions. And although I'm invited here today as the chairman of STACS, which is the capital markets infrastructure player, I also chair a large insurance company here in Singapore, which is grappling with exactly those issues in terms of how you bundle product and bundle 10 and 20 and 30-year investments together that are going to be suitable for. And I think back to Sopnendu's point, that there's a new generation of people coming through that are just not going to buy any old thing. Yeah, and right now there isn't a lot of choice. Yeah, and I think it's so this wasn't kind of where I was going. I was going to actually pick up on a question on greenwashing and how you measure this, but I just think at the heart of this, I think Thomas has got a really important point, because what companies receive investment, what companies are successful in receiving capital, whether it's in loans, whether it's in bonds, whether it's in equity, public or private, that is going to help them innovate. And I pick up the innovation theme in this space because Thomas used the word burning platform. This is a massive issue. This is not easily solvable at all. And I think it's not going to be solvable with just doing more of the same around renewable substitution, a bit of efficiency, a bit of pollution prevention, as we're currently doing it. Or someone says fly less or eat less meat. It's much bigger. So I think where financial institutions come into play, Sop mentioned the Singapore initiatives, particularly around the most recent piece around what's happening in the whole green print and the green agenda around support here. I think FIs have a leading role in any economy, and particularly here in Singapore, there's a key pillar, been a key pillar of the economy, will be going forward. And I think we have got now I think, a coalescence of views that we need to put this much greater accountability in figuring out where are dollars going, and are they going in a sound growth, good green way or not, and to what extent is the data able to help force change. And a couple of the startup or the companies you heard from the beginning, I thought it was really interesting because they're really good digging down and providing data, which is if you can't measure it, it's not going to mean much point, which is really great. So I think one of the questions I wanted to pick up on was, how do we begin to measure this in an FI sense much more powerfully? Sop mentioned various initiatives we have to have green bonds and green loans in the system. Today, it's a very tiny fraction of 128 trillion bond market is effectively being put out there as green bonds. But we at STACS, who provide capital market settlement systems on an immutable, trusted, proprietary Singapore-based blockchain, we believe that by linking smart contracts to bond and loan distribution of the actual proceeds, by having the feed from data from suppliers and people such as Earthbank or others that could be providing truthful information into the smart contracts, that we can get a place where we can distribute loans and bonds in a way that we can be pretty certain that this is not just greenwashing. I think that is then going to allow reporting for financial institutions to be driven by the regulators to start to actually say not just how much is your portfolio in coal, but on a much broader, much more scientific, and much more sensible basis, where the dial is moving in terms of that investment pace. And that will lead investment into them. That will lead investment into funds that they manage, investments that they advise on, and really picking up that next generation. Again, it was mentioned earlier, it's a generation of young people that have a lot of wealth being transferred. But I think it doubles up because it's these people also coming up in their careers as decision makers of other people's money, as they're employed as asset managers, fund managers in the decision-making capability across the world, rather than just also the family side. So there's a step shift here, which bring us forward. So measurement, accountability, the immutability of that, together with how innovation can be accelerated, and there's a lot in there around tax policy and other government help that could come around this. But I think the word greenwashing was come up in one of the questions. Look, there's an element of that helps move the doubters and the non-believers, and it helps give visibility and helps people want to follow and try. That is okay, but I think as we go forward, these will be serious regulatory issues that will affect people's capital, the prices that are paid for capital, the prices that are paid by ultimate borrowers for loans, bonds, etc. in the future. That was just really picking up on a couple of the points that hadn't been covered. Amrita, I don't know how you want to facilitate the question.
I think, Ray, I was thinking that responding to your intervention, I think what I was seeing is a continuum of 5 T's. Between what you said and what Thomas said and what Amrita and the presentation were talking about. There are 5 T's. There's a taxonomy, there is a technology, and there's a transition from brown to blue to green. There's a transfer of wealth from people with brown wealth to green wealth, and people who miss out have the last 5 called the taxation. So if you get this frame right, the 5 T's, I think we have largely got into the right frame of reference when you talk green finance. But from as a technologist, I think we have a significant role between technology, transition, and transfer. And if that's, roughly speaking, global wealth is $300 trillion, Even a 100 basis point allocation to technology is a $1 trillion opportunity for fintechs who are going to focus on making this technology transfer, transition and transfer. So I think collectively we have a role so that we can incentivize the shift. I forgot to mention in Singapore also that MAS has announced quite a small in terms of the overall number, a $50 million of incentive for anybody who wants to write software in either of the 3 stacks. So if anybody's out there who's interested to solve the technology transition and transfer, please do speak to us, because this is real. We got to collectively fight it out.
Yeah, I would just add to that, to everybody listening, that at STACS we've been very well supported by the MAS through multiple rounds of awards and grants, and indeed are engaged in this process. And what he says is real. Yeah, this money's there to be deployed.
Well, I didn't talk about the taxation. That's somebody else to think about, but that's going to be eventual if you miss out.
Yeah, thanks.
So I think maybe Thomas, you would like to reflect on any particular example which came to your mind, which is helping ordinary people like us. How do we change our behavior so that we start collecting these little reward points called carbon points, where I can go and encash for something meaningful? Is there anything what you're seeing in Denmark as we speak about this?
I'd say talk to Dave. He's like, see, that's me.
Okay. So I said, Dave, who's going to respond to this? How do I collect my carbon points?
Yeah, let me maybe just briefly, and then I'm sure David would elaborate more. But Dave, I think what is really interesting, and if we take a term like open banking or the PSD2 in Europe, right? So giving people or giving companies access to consumers' transactional data, and actually starting to see the footprint or the impact of your buying behaviors, and actually making them capable of making smart decisions based on that. And that brings me a little bit into something I was thinking of, because there was also some questions saying, around, how can technology accelerate? And I think the only way to solve this problem is actually using technology. And I think there's 3 technologies that is crucial in this area. Also to answer your question, Sopnendu. So that is, of course, the whole big data. This is a data, for me, this is a data play. Very much a data play. This is around the application of artificial intelligence. We've seen that through many of the startups presenting here. And then I think Ray has an excellent example in the application of blockchain and distributed ledger technology in general. So I think when it comes... Can
I push you on that data thing a little bit, because that's a very good point. And I want the audience to hear this from you, because one of the challenges in Asia we face is transparency, because any data you share can cause unintended consequence of certain thing you don't anticipate, in terms of things can go wrong, perception can get created, because the economic trade-off between green data or green behavior and the pricing can cause a lot of transitory challenges. How do you expect people to be transparent on data while we have not figured out the economic suitability or economic viability of the switch? Where are your thoughts on this particular challenge, especially in Asia, we face this?
Yeah, and I think, if I understand you correctly, I think at least what we've seen here, this is about the exchange of value. I would very much like to give my data and use the solutions if I get a little bit what I mentioned before, like access to an informed decision. If there's an efficiency, if there's transparency, and there's accountability, and it educates me. If you focus on these points, and I think coming from the Nordics, where there's such an inherent trust, so we tend to pick up on solutions like this very easily. And I think we have seen that to a very big extent to what we see coming out of the open banking space, with giving people access to data, giving them access to knowledge about their spending patterns, and then based on that, acting on smart climate decisions. And And those three core technologies for me is and I think especially what Ray is, when the blockchain and the distributed ledger technology has a huge potential in this area. Naveen, you pointed a little bit towards Dave,
yeah.
and I think
yes, I think Dave has to tell me how to put the point.
Sorry, did you want me to pipe in here?
Yeah, please, Dave, tell me, how do I collect my points?
Yeah, so
you're not collecting your points, you're giving away your points.
No, I want to collect the points so I can trade off.
Yeah.
Yeah, effectively, if people that say, hey, I want to do some good and I don't want it to cost me any money, that's where points are a really good way for them to convert those points to offsets. And we've seen just with the in New Zealand with the largest rewards point scheme that we've just recently gone live with. In fact, it's only soft launched, so it's fully launched on the 31st of March next week. We've already seen, really high uptake when you compare it to air points as an option. So that's really encouraging. I know at the moment it's probably an unfair comparison because a lot of people can't fly to a lot of places right now. So perhaps air points are less attractive. But what we're seeing is this pent up frustration that people want to do good and they don't want to pay to do good. So this is an easy way to do that. And it's engaging them to use those rewards cards more because they actually feel like by swiping that card and using that, that rewards card, or in the bank's case, that credit card instead of another bank's credit card, they can actually do some good. And they feel great about that because we complete that journey with showing them a receipt of exactly where their carbon has gone, and they can track their progress. And that's that end customer journey bit that we complete.
I think we have a couple of more minutes. Can I ask two questions? One to Amrita, one to Ray. Let me start with Amrita. I don't want to put you on spot because you have an interesting company because you manage card and fleet, which is a big part of this whole problem statement. But you also have a responsibility to transit to a green economy with a balance. How you're thinking about this thing, that's for Amrita. And for Ray, you have a solid experience in insurance industry. Maybe I'll stress to pension industry. Where do they stand in this space? Because you have a very interesting way to incentivize that shift in the behavior with the right insurance and a pension structure. So first, Amrita.
All right, thanks, Sop. So I am not here in my capacity as driver lending manager for Grab, just the moderator today, but I can say that, Grab does, we have a strong mission, especially on empowering our customers. That could be our merchants, that could be our drivers, and even our mass market consumers. So that is a deep part of our mission. And I think personally, in thinking about the financial services that we're offering, especially to our drivers, we look at them holistically, like how are they, obviously there is a bottom line that we have to think about, but we also, definitely take into consideration what are the externalities of the products that we're offering. And we want to make sure that we're never doing anything that's predatory to our drivers, but also to the environment. So I think that's all I can say on the subject without getting in trouble, but thank you so much for thinking of us.
Ray, the last question for you.
Yeah, no, thanks for that. So I just took over the chair of Aviva Singlife in Singapore. It's a traditional insurance company that's come together with a more disruptive player. I think if you look at the status internally today, a lot of effort to be done on what would be putting things digital to save waste and save post and all that kind of stuff. I think these kind of efficiencies in if you like, in just saving usage of things is one thing. But as we sat as a board, maybe in early February, trying to figure out how the compensation scheme is going to work for the new company, there was measures in there for digital, for how people are managed, how risk is managed in an insurance and actuarial sense. There was zero presented in the original papers on environment or sustainability at all. So, we've been remolding that, and we're now going to have a multiplier up and down on the overall group bonus scheme linked to various measures here. But the effort that we want to put in first up is on the investment side. That is where it has not been a feature really at all. So when we buy a REIT based on what the manager wants to recommend from a pure return basis. We don't stand back and say, is this REIT green? Or is this REIT half green or better green or whatever? And in the market now for a new chief investment officer, and one of the criteria as we go through that interview process is, you know, be able to use this not just as a feel good and we've got it in our goals, but this is a customer opportunity. This is an opportunity to get the, you know, hundreds of thousands of customers we have that really get this and get them to do more with it because we provide the opportunities for them in the investment and in the way the products are packages. Even potentially giving them carbon click points or whatever they need to feel that we get it and that they're contributing and that the money's being channeled in the right way.
Thanks. Amrita,
Amrita, you want to help us close it?
Yes, I can. Thank you, everyone, for these really valuable insights. But that is all the time we have for today, unfortunately. So the audience that's still here, please join me in giving a big thank you to all of our panelists and change makers, as well as APIX for their support and Naveen for putting all of this, and Jean and Yoru and Shaf for putting all of this amazing work together. So thank you, everyone, and have a great day.
Thank you.
Stay green.